Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, we talk a lot about what the stock markets are looking like right now, the trading action that you're witnessing, and what kind of a trading action you really see throughout the trading session. Of course, we've opened after a truncated holiday yesterday on account of Shivratri, and the markets have seen a very sharp gap down opening following the weak global cues of US markets and the Asian markets, and of course, the rising, escalating tensions between Ukraine, Russia, the increased sanctions, and the way it is being anticipated how the global economy might face a hit as well due to these sanctions. You are already seeing countries and even corporates around the world increasing their sanctions and restrictions in Russia, and the Russians are definitely feeling the heat of it, whether it is with the respect of freezing the bank's accounts at this point in time. Over $600 billion worth of accounts that the Russian government has abroad. And of course, apart from that, companies are increasingly stalling their operations. Talk about Visa, Mastercard, Google Pay. Apple is stopping its sales in Russia as well. So all across, we are seeing that countries and governments, as well as companies now, corporates now, are cornering Russia at this point in time with this invasion, as an action against the invasion in Ukraine right now. Now, when you see the stock markets today, we've had a very, very sharp fall right at the opening levels. The markets are also extending their opening fall right now. The Sensex fell by 700 points right at the opening tick. That was over a percent cut. But now we are seeing the Sensex slip over 900 points as well. The Nifty also was down by almost 200 points at 16,600 or thereabouts at open, and is now seeing further fall. Of course, the soaring oil prices are a major reason as well. Brent crude prices have risen above the $110 a barrel mark as well. With these increased actions, and the repercussions of that are being seen on the ATF fuel prices, or the jet fuel prices, that have risen to all-time high and have risen by 3.3% as well. So keep an eye out on the way oil prices have been moving all across the globe, and the sectors which have a direct link with the oil and gas sectors will also be feeling some pinch right this point in time. Among the Sensex 30 constituents, you see Tata Steel, Power Grid, NTPC, Techem, and Mahindra as still bucking the trend at this point in time, despite the overall weakness in the stock markets. But talk about the other stocks, ICICI Bank, Maruti Asian Paints, HDFC Twins, and even Kotak Mahindra Bank, Ultratech Cement, IndusInd Bank, Axis Bank, all of them as a major drag on the major Sensex and Nifty index, 1.5 to 3% lower in trade. Broader markets definitely still faring better than the benchmarks right now at this point in time, seeing about a 0.5% cut at the moment. The Nifty Bank feeling a deeper pinch of over a 2% cut at this point in time. The auto index was leading the losses as well, down about 2%. The Nifty metal index, however, was seen bucking the trend at this point in time. Oil and gas indices also seeing some kind of a higher move at this point in time, and the IT index was largely muted. But of course, automobile stocks will largely remain in focus today, as they have been reporting their monthly sales numbers. Ashok Leyland's total sales in February was up 7 odd percent year on year. Mahindra and Mahindra's total sales jumped about 89% on a year on year basis. Maruti Suzuki's total sales were largely unchanged. Tata Motors' total sales were up 27%. Eicher Motors also saw its sales rising by 7 odd percent, but definitely, and Escorts saw a decline of 46 odd percent on a year basis. So definitely that's something that you should keep an eye out on. The auto stocks will remain in focus today. But apart from this, brokerage houses are keeping some of the stocks on their radar as well. Keep an eye out on Biocon, for example. CLSA has come out with its report today on reiterating its sell call on Biocon, as it sees the execution challenges on the biosimilars front. Dr. Reddy's from the pharma space will remain in focus, as Nomura has come out with its report here. It has a buy rating on the drug maker stock. It's constructive on the stock, as the current weakness could be actually utilized for buying opportunity or accumulating shares, it believes, as at this point in time. Of course, there have been some macro data that the markets will be reacting on. We did see on Monday evening that the Q3 GDP figures came around at 5.4%, much lower than the expected level of almost 6 to 6.5%. So that is also an added or domestic factor that is dragging the sentiments at this point in time. The GST collections also have come out for February, which have coming at 1.33 lakh crore rupees, although on a monthly basis they have seen a dip of 5.6 odd percent right there. So this is the kind of macro setup that the markets will be tracking and the triggers that the markets will be reacting on in today's trading session. But definitely we have to see how the developments on the Ukraine Russia war front really escalate from here, as in when the economists and analysts gauge the impact that it could have on trade with other countries. Like India also trades a lot of goods with Russia at this point in time. So how are things going to really pan out if the war situation really escalates and prolongs from here on as well? So all those factors will be important to track. But right now, sentiment's clearly taking a beating, and on an everyday basis, we are seeing that bull strength is being tested. Definitely, bulls have snapped the 2 days gaining streak that they clocked in, and of course, there was a break of one day. But the stock markets are definitely feeling the heat with more and more sanctions coming about on Russia. We'll keep you posted with everything that's passing on the D street. So do stay tuned with us onto Business Today, and don't forget to subscribe to our YouTube channel. Thanks a lot for tuning in. For now.